All right, so it is now Thursday, June 4th, 2026. The pattern day trading rule, PDT rule, is finally removed today. It's finally abolished. We've been talking about this for years. Actually, the PDT rule was instated back in 2001 in February. On February 27, 2001, it was approved by the SEC. And basically the rule came after the late dot-com bubble in the late 1990s, where in 2000, 2001, the market had a bit of a crash. And I don't know if there was some kind of aggressive margin use, obviously, during the dot-com bubble, which is not present today. And that's part of the reason why the technological revolution in AI and the infrastructure build out is not a bubble. And it won't be. Even if there is a pullback, the pullback is not the same as a crash or a bubble. And it's very unlikely to happen, at least as of now. And anyway, so what happened in the dot-com bubble prompted the pattern day trading rule to be implemented, which is basically designated to traders who maintain less than $25,000 in equity in their account, meaning that they can only trade 3 times within 3 trades with that buying power within a 5-day period. Anything above that would cause you to have a what's it called, a restriction placed on your account where you can't trade for 90 days. It's happened to me in the past before. And finally today, the rule is removed and it's changed for a risk-based intraday margin framework. And so this basically allows for more proactive trading, more for people who don't have $25,000 in capital. It allows them to be able to trade in and out, be able to make more decisions, which can be a bad thing, but being able to make more decisions, the flexibility of the removal of the pattern day trading rule allows people who don't have a financial cushion to actually attempt and try to implement their strategies consistently intraday and then over time during a week's period. So today, June 4th, 2026, the pattern day trading rule is no longer a thing. I woke up today with only $10.33 in my account after taking 2 losing trades on QQQ yesterday, which I switched over. And so basically this morning, I decided to just take a trade to see if I can give myself the opportunity to try and test the pattern day trading rule, which means I would need to take a trade with the $10 in buying power that I had. And my goal was to double it, at least to 20 cents or 30 cents, given whatever I can do. It's very much nothing, but basically I took a 7:45 call on QQQ this morning, which I wrote about on my posts and on Twitter, where I entered a 7:45 call this morning at actually 10:44 a.m. Right on a perfect pullback. It was actually a great entry. It was right here. No, right here. 10:44. This is where I took the entry on a 7:45 call, anticipating at least half of this gap to be filled and expecting exuberance with the SpaceX IPO and the upcoming IPO boom that's happening, and expecting this kind of a drop, this overnight drop in the previous day's drop to be somewhat recovered. The jobless claims data this morning came in. I haven't actually looked at it, so I'll have to go check that in a minute. But so I took the trade here for 8 cents. I only had $10.33 in buying power. I took the trade right here at 10:44 Eastern time. And we got this initial move to over 740, which was great, but it only brought the contract up to like 18 or 19 cents. And then of course we had to have this sell-off, and I was feeling discouraged, and I really couldn't have expected it to work out anyways, because I only had $10 in buying power. But I was able to hold for 3-4 hours as we continued this very slow grinding rally. It looks like a decent rally, but really with an out the money call, with an out the money strike, $5-6 out the money from here, it's very unreasonable. I spent $8 on it. Anyways, I sold it right around here when we finally broke above 743. I was Initially thinking over 740 would grant me 24 cents, which would be a 200% and give me the ability to even try to take another trade during power hour, which would be on washed capital because I started with $10 this morning. So if I do take another trade, I have no settled buying power. The point is to see what happens if I do take another trade. So I have to force that regardless if I just stop out right away just to test it. But so that's the theory. But then as we had this pullback and these contracts just lost their value, they stayed above break even the whole time, but it was very slow, and this was just not enough of a strong rally. No big candles besides this initial one, where these contracts could actually accrue value that would allow me to be profitable on the trade how I was looking to. But I waited all the way, well, 3.5, almost 4 hours until here. We finally broke above 743 just about an hour ago. And I finally took profit for 26 cents, which is 225%. So now my count is at $26.81. $26.85 is my account now from $10.33 this morning just on one trade. So that worked out really well. So now I have $26.85 in buying power. I'm going to be looking for another trade. Yes, the account's down 60% or 59.76% because yesterday I took 2 losing trades. My account went from $49.81 down to $10.33. It was pretty horrific. It was even worse than 60%, obviously, because the account started 3 or 4 days ago, 3 or 4 trading sessions ago at $66.74. So that's why now at $26.85, it's down 60%, which isn't great, but it doesn't really matter. My goal is just to test the PDT rule today. So I'm looking to take a trade here. I think obviously this bullish momentum is strong. It's holding. I think we may have a decent green day tomorrow. That's my premonition. It's not a prediction. But I will say that I will be looking right now in the next hour. This is power hour, 50 minutes left in the market. I'm looking for an opportunity to take this washed buying power that I have, $26, and I could use that to take another normal trade, relatively normal, during power hour on QQQ. Even though, funny enough, the SPY is totally outperforming QQQ today. See, SPY is all the way up into this previous gap level, and then you pull up QQQ and it's way down here. That previous gap level is actually the all-time high. So QQQ has had a big sell-off today, mostly due to the SOXL, mostly due to the cybersecurity stocks. It had earnings yesterday and they sold off, which has a lot to do with this, I'm assuming, or the semiconductor bull 3x leveraged ETF had a big gap down today, which is really hurting the QQQ, obviously. And so yeah, the other cybersecurity names were kind of cooked overnight. And anyway, so that's why, interestingly enough, I switched over to QQQ, and then now all of a sudden SPY is outperforming the next day or two. So we see Qs is still trying to get up into that gap, and SPY is like all the way through it. Like it barely even gapped down. It's all the way through. So like just look at the difference here. QQQ compared to right here on the beginning of the day. SPY compared to right here on the beginning of the day. It's way elevated above. Which is frustrating because if I would have took that trade here on SPY, it probably would have worked out much quicker. And I switched over to QQQ for this very reason. So it's just a game. I just have to understand that some days the QQQ is going to underperform based on the underlying stocks and the semiconductors and whatever else. I don't know if the cybersecurity is even in there. Actually, yeah, of course it is. But so in general, I don't know. I don't think cybersecurity is in the SOXL though, but in QQQ it is. But they both weigh together and they play together to cause this divergence today. So with QQQ and NASDAQ, the futures contract actually, let me pull up a 65-minute chart so I can compare these. It's really filling in that gap and it looks pretty good. On futures, it's getting into this fair value gap on this 65-minute chart here. But on the 4-hour chart, it's not really much of a fair value. So this is getting to be a bit of a tricky spot. We are back above the 9 and the 21. And then with SPY, it's looking a bit stronger and nearly at all-time highs, where NASDAQ is a bit more shy. It's really not too crazy, at least on the future side, but on the index side, yeah, they do look very similar, at least on the 4-hour chart. But On the lower time frames, they look quite divergent with SPY and Qs. Qs just had a big gap down today, and SPY really didn't, so that's the big difference. And now they're only, what, $13, $15 apart, and very soon we're going to see QQQ surpassing SPY by price and momentum. I've been saying this for 16 years. For the past 16 years, QQQ has been outperforming and catching up slowly by slowly, little by little. And yeah, that marks the moment. That's all I got to say. But I'm pretty excited for that. And I think it's also part of the reason why I think I should be trading QQQ over SPY. And Bitcoin is also cooked for now. Well below 70, almost down to 60K. It actually did get down to 60K, but the Clarity Act is on the way. Hopefully that can be a little bit of a positive. And then the ARMA, if you don't know about the ARMA, forget what it stands for, something armament, but it's not armament, but you know, that's the abbreviation, I would say. But I don't know what the actual abbreviation for ARMA is, but it has to do with the Bitcoin, Bitcoin and gold being repriced for Bitcoin to be able to have the liquidity to purchase 200,000 Bitcoins per year through the government and the Federal Reserve. And they're going to be able to hold 200,000 Bitcoin and accumulate every year over 5 years until they have 1 million Bitcoin, which is about 5% of the supply. And this is a very big deal. If it passes alongside the Clarity Act, this is going to start the next wave of crypto exuberance, specifically in Bitcoin. Everything else I can't really speak on. I think Bitcoin is king. And I think Ethereum maybe has some use case, but I don't really know too much about the Ethereum theory. And I don't really know too much about it. I do own both. I own Solana, Bitcoin, and Ethereum, but obviously Bitcoin is the big one, and it's what you should be in because it has the it has everything you need to know. I'm not going to break it down now, but Bitcoin is definitely the way, and things are starting to come together in terms of regulations and opening the market to allow more innovation and actual use case of some of these tools, because Bitcoin is a monetary tool at this point. Bitcoin is a very good use case in terms of not just inflation, but in terms of value creation and protection. I can't think of the word right now, but Bitcoin is going to come down to the technology behind Bitcoin and what it's used for. The limited supply of 21 million tokens is about 99% already mined, and so this really is technically the digital gold. If you understand, Bitcoin is basically digital gold, and Bitcoin has a limited supply, unlike any other, even gold. And I think Bitcoin may as well eventually catch up to gold and surpass it by a long shot. So anyway, that's a little bit about the Bitcoin case study, and I think the Bitcoin, some of the regulations coming in with, or the Clarity Act, and then the ARMA bill, which is going through at the moment, and hopefully you can get instated, and that will tie into the Federal Reserve, Kevin Warsh's new chair tenure, where he's mentioned using Bitcoin as a tool for monetary use cases, like affecting the supply and the reserves, and then being able to provide more liquidity and building up a foundation as the tool becomes more widespread and people begin to adopt it over, not just over the dollar, because the dollar always will remain the world's reserve currency 100%. That will never change. But also because of the energy markets volatility, and Bitcoin will have a good store of value, and it is a store of value based on all the data and the factors behind it. And it's just going to become more clear over time where this is heading and how Bitcoin is easily going to surpass 1 million in the future, just to put it simply. So I am looking for a trade. Let me pull my account back up and see what it looks like. I actually don't know what these option contracts look like. I only have $26.85, so I'm looking for something around there because that's all I got. So yeah, $26.85. The other call that I had just back down to 2 cents. QQQ only sold off from 743.43, $2 down to 741.78 now. And the contract I had it for 8 cents, sold it for 26, probably went a little bit over 30. Now it's down to literally 2.5, 3 cents. It got totally destroyed on that last pullback. So the volatility is definitely there. It presents an opportunity to possibly take another trade. And I'm going to do it anyways because I want to test the PDT rules, the main key. The 743 call now is actually 18 cents. So that's pretty reasonable. But we are losing trend here. This losing a bit of trend, we have a bit of rising volume on the downside here. A bit of rising volume, losing the 9 and the 21 on the 5-minute chart. And on the 2-minute chart, we've already lost the 9 and the 21. We're starting to come down. The previous high levels would be like 740.50 to 741. So that might be the range. We might drop another $1 from here in order to get back into this this range right in here. Could happen, but also we could hold up above this 100 SMA on the 5 and continue going higher. But I don't really know how much higher we could actually go since we've been rallying most of the day. Although it's not very strong, it's not super strong. I mean, it is like nearly a $10 move off the low, like 732 to 743. So realistically, it is a pretty good move from early in the morning. But for me, it just feels different because I took an $8 contract right here and sold it for 26 cents right here, which is, I mean, it's 225%, but like based on this price action, like you would think that it would be more than that, but no, because the option's just so far out the money. At least I could get that over with. Now I have $26 of buying power to try another trade. So we'll see. 743 calls are already at 22 cents. So the volatility is there. I'm looking for an opportunity to capture some momentum, but I'm going to wait a little bit. We have 40 minutes left in the market. I'm looking for some type of decent entry, maybe to go long again if we can break back above some of these moving averages and reclaim 743, then maybe we can go long for another higher high, but not exactly sure right now. We could definitely just sell back off halfway down. So let's see, like the 1 hour chart. It's just 5 green candles in a row on the hourly chart. And it is a gap from yesterday's close, but we definitely filled it. I mean, the yesterday's close is 744.21. The low a day was 741.01. So we haven't filled the actual gap on the close yet. Whether that happens today or not is in the air. That would be 744.21 on the daily chart at the previous close. In the 4 hour chart, we have a new 4 hour candle that just came in the past 20 minutes, I think. Pretty sure, or maybe actually like an hour ago. And it's already making a higher high, candle by candle, above the previous 4 hour candle. And it's halfway in between that gap at 744, 20-ish. So there is a high probability that we can still go higher, but we would need to recover and reclaim 743 on QQQ, and then on SPY it would just have to make a new high a day, which it just did like 15 minutes ago, over 758. And SPY has made a less of a move actually. SPY has gone from 751 to 758, where Q has gone from 732 up to 743. So QQQ is definitely making the stronger move intraday, but based on the gap down, it's still behind, and it's still negative 0.27%, where the SPY is already up and it's already green. SPY's up 0.47%, 0.48%. So a little bit of a balancing act today. Let's see if we can get some more continued bullish momentum. Let me check on these jobless claims. I want to see. I didn't check it this morning. Well, jobless claims soared to highest level since February. The initial jobless claims this morning came in at 225,000. people claiming unemployment versus 215K, the previous 212K. Continuing claims 1777 versus 1780, so that hasn't made much of a change, just actually a slight decrease, but the initial opening claims are higher by 10,000, which is not ideal, but it's not much. I mean, but if that's the highest level since February, it's only 3 months, 4 months. But that is probably has a lot to do with some of these previous companies to lay off 10, 20, 30% of their workforce in the past few months, obviously. Like Meta, like, what were the other ones? Meta, Apple, Amazon. I can't remember. There's a couple other too, but plenty of companies have laid off quite a bit of their workforce in reducing headcount. Oh, well, yeah, I already said Meta. Definitely Meta, Amazon, and I had it written down. I can't remember which ones it is. But a lot of the big tech software companies are reducing their headcount for efficiency purposes. And then tomorrow we got NFP, non-farm payrolls. So that'll be even more important. And next week, CPI data, inflation data, once again, after previous month coming in at 3.8% year over year. This is going to be the important one that people are really going to be paying attention to. The inflation right now is kind of the headline. People are worried about it with all the price fluctuations, the increasing gas prices. Well, 743 call went from 18 cents up to 37 now pretty quickly. So the volatility is pretty decent, even though the past hour we've been somewhat consolidating, chopping downwards. But I think if we can break out, we can capture some momentum. And I'll test this PDT rule once again. I just hope, yeah, no, I'm not trying to take the same contract. The 745 I had this morning is only at 4 cents. I mean, it's cooked. But I got what I needed out of it. It just took like 4 hours for the trade to work out. It was it's frustrating when you have a trade that just like is going in your direction for 3 hours straight, but you're still not at profit. Like the profit target keeps changing because of the option is so volatile, and the gamma and the theta is decreasing, the gamma is increasing, and the beta is separating. The beta is decreasing on the options every moment that the underlying isn't moving directly in your direction, you know, in a significant way. Every red candle increases your profit target if you're out the money in a lot of ways. And it really is difficult to trade. Even with a just straight rally like that, it was a difficult time sitting for 4 hours with an $8 contract, trying to sell it for 20 or 30 cents. It took 4 hours, but it was successful. So now I can test this PDT roll. We'll see what happens, because, I mean, yeah, it says my available dollars, everything's there, but, you know, obviously it doesn't say my settled funds are not there, but that's kind of the point, is to be trading on unsettled funds. And ideally what you would be able to do, at least I don't know if it's 100% true, but this is in my mind, is that you should be able to take many trades in and out on the same buying power in intraday. I don't know what the margin what the margin balance is or how that works exactly. I haven't fully read out the new rule with the margin. What is it called? Let me see. It's like a risk-based intraday margin framework. Let me see if I can look it up. The thing is I'm not using a margin account, I'm still using a cash account, but the new intraday margin framework replaces the old PDT rules with the risk-based approach to managing margin accounts during the trading day. The framework requires that your account equity remains sufficient to cover a defined margin requirement at all times throughout the day, not just at the end of it. And if your positions consume more margin capacity than your account can support, you will have an intraday margin deficit. This system does not restrict how many times you trade and does not label you a pattern day trader. Instead, it monitors your account equity in real time, and if your positions consume more margin capacity than your account could support, then you will have a deficit. Handle it poorly and repeatedly, you will face a 90-day trading restriction again. The same consequences as the old PDT freeze, arrived at through a different path though. But the new framework is designed to be more flexible for active traders and more punishing for traders who oversize their positions. That's key. It calculates intraday margin requirements based on position volatility, concentration, and correlation, not an arbitrary dollar threshold that hasn't been updated since the dot-com crash. The change aims to reduce risk of intraday trading exposures more broadly and give customers more opportunities to participate in the markets while reducing compliance costs for members, also known as broke people. The SEC's accelerated approval for FINRA's proposal to eliminate the PDT rule confirms effective today, June 4th, 2026, and the rules implemented. So that's pretty interesting. Seems pretty good. Okay, we're back above 743. That's good. These contracts are at 57 cents now from 18. Yeah, I probably should have taken that. No, but it was not a good entry. I mean, we're below the 21 there. Now we're getting the confirmation. 744 calls, 24 cents. I'm going to try to go ahead and just take an entry here. See how it goes. I'm in the 744 call at 23 cents out of my $26 buying power. So now we're looking for a new high day and possibly a move up towards 744 with this momentum that I'm seeing. I've entered the trade, $23 contract, 744 call, QQQ, with 30 minutes exactly left in the market. Let's see how this goes. And I will stop out really quickly if it doesn't work, but ideally we get this momentum to just continue right here because we just got a decent move back over 743 with the closure. That's what I'm looking for. Now I want to see this move up to 744 at least. We're still trying to catch up to Qs. We're talking about red to green. QQQ was down like 0.6% earlier and SPY was going red to green. Now SPY is up 0.53% where Qs is still negative 0.1%. So there's a new high a day. Now maybe we can go from red to green. If we go red to green right here, it's like 75 cents to go 0.1% on Qs. That'll put us over 744. That'll give me an exit on this trade. And then I'll be able to see what happens when I do hit the sell. So this is my test of the PDT rule to see how it works, see what happens, and then maybe even take another trade to even really test it. I don't know. You know, it feels like I could get in trouble for that, but that's the good thing about it is that you're not supposed to get in trouble anymore for that. Now I should be able to take more trades. Not that I'm going to. Obviously, you should only try to take 1 or 2 trades a day in all reality. And if you take 2 trades and they don't work out and you don't get the result you want, you should probably wait until the next day and take a break and take notes and reassess what happened. But it does allow you to make those decisions when they become necessary and then be able to get back into a trade when it actually is more confirmed. All right, so I'm down a few dollars on that contract here. We did make a new high a day, but very briefly. We need some real momentum to come in as we have broken out this new high. QQQ and SPY back above high day, SPY over 758. QQQ barely over 743. We want to see 744 at least. Capture some profit on this trade and then get out and then see where we're at. So let's see this momentum come in here. 744 would be pretty good. I think we can go red to green, which would be over 744. Well, if the previous close was 744.21, that's the red to green spot. So 744.21, like I said before, that's the previous day's close. That closes the gap. That goes red to green. Where SPY is already green by 0.5%. So that would be nice to see here. We can get some momentum back to have a red to green move on both Qs and SPY. Yeah. All right, let me pull up the 1 minute chart so I can see if this momentum comes in, because we have been chopping sideways here for like about an hour, and we're finally barely breaking out here. So let's see this momentum come in, ideally. Yeah, we definitely need to hold this 743 though. That's the thing. We need to hold 743, and then we need to get through that high 743.50. Starting to bug out, but coming down into the 9 and 21 on the 1 minute chart. And I'm down, oof. I'm already down $10 on this contract. Oh no. Yeah, the volatility is not so great, but I don't know. I'm not really trying to stop out after 2 minutes of a red candle after I enter. Made a new high and then instantly ruins the trade right after, but whatever. See if we can get this momentum. It's a 744 call, so it would go in the money if we can get it, if we can get to that red to green, like I'm saying. But so this contract would be in the money if we can go red to green, which is only, well, it's 0.15% now, but we need to get to 744.21. That would be 21 cents in the money. Well, that's like my break even on the contract, since I spent 24 cents on it. $24. Actually, I spent $23 on it. So that's almost perfectly aligned with the previous close. My break even is perfectly at the previous close, which is the red to green move, which SPY has already done. So let's do it on Qs, which means, yeah, we just need to go right up to here, right where this closed, right here. That'll be a winning trade. That'll be I would like to exit there. Yeah, these contracts are quite volatile though. 23 cents down to 14 cents, back to 18 cents. But the last one went from 18 to 60 cents real quick. It's probably at 90 now, or at the high, but moving fast. So let's see if I can recover a little bit, but I really just want to see if I can get a decent exit on this. Either way, I'm going to have to exit, but that's the test of the PDT, regardless if it's a win or loss. All right, let's see what's going on. What's the news? SpaceX coming up. Crazy. Next Friday, SpaceX IPO is crazy. A week, exactly 1 week from today. No, next. Is that a Thursday, I guess? I thought it was a Friday. Today's Thursday. Not a lot of bullish momentum coming in right here, but we've been consolidating for a little minute after breaking out. I thought we would get continuation, but we never get continuation when we break out and then I enter. It always reverses every time I enter a breakout. Yeah, I'm probably getting cooked right now. We're back down to 743. These contracts are down $10, down to 13 cents from 23. Not ideal. Only 20 minutes left in the market, and I'm just looking for a red to green. I don't know if that's even possible at this point. 0.15% on Qs to go green. It's $1.20. I don't know if that's gonna happen. Either way, I'm going to end up selling this for whatever it is at the end of the day, and then that'll be the test on the PDT. Because all the buying power that I'm using now is profit from the trade I took earlier this morning with literally $8, with only $10 in the account. So it is what it is if it doesn't win, but I would obviously like for us to get that red to green move into the close, and then I'll be able to get that exit and still have capital to possibly trade next week. But I don't know, it's not looking very likely. We're back below 743. The momentum just instantly dies the moment I take an entry, even though we hit a new all-time, a new high a day. It's really annoying. But trading SPY today would have, feels like it would have been better, but I don't know. Qs did make a bigger move by the dollar, but percentage-wise, SPY is just up a lot more. SPY's up 0.5%, where Qs is still down 0.17. Like, what? I really don't like that. Yeah, so it's starting to slip. It's looking bad, but we just got to be patient. I'm just going to wait till the end of the day, 20 minutes. If we don't get the red to green move, I'll probably sell the contract for like 2 or 3 cents, and I'll still be able to see what happens. But I don't really want to take, I don't want to go back to zero. I really can't afford to, but we'll see. I'm basing it on the momentum, and I'm just looking for that continuation here. Any sell-off would be totally unexpected, uncivilized right here. We have to rally. We have to pump it up. Over 744, the contract's in the money. We're barely holding on to 743 here. I don't know how to feel about it. Just gotta wait. The 1 minute chart sucks. All the charts suck, honestly. This 5 minute chart sucks. There's 3 of these weird red candles in a row. It's like literally just, if you really look at it, it's like sideways for a minute now. Sideways for since 2 o'clock. Now it's 340. We're still at the same, we're at a lower price than we were. We're at the same price as 2 o'clock. Oh no, this is looking bad. Oh God. Yeah. That's a painful candle there. Yep, well, there we go. All the profit is gone. And my account is literally back down to seven literal dollars. Okay, well, that's it. Well, I tried. I really did. And this is, yeah. What am I supposed to do? Stop out and go short? Like, I don't, this is not a short. But of course. Yeah, oh man. Oh, that hurts so bad to look at that right there. Okay, well that's it. There is no testing the PDT rule. I'm gonna have to sell this for like literally 1 cent at the end of the day. There's just no, it's gone. So, yep, I'll be gone for a while because I literally have no money. I literally can't afford it, and I literally can't work enough. I can't get enough hours. I can't get paid enough. I can't find another job. I cannot find a career for 10 years. And yeah, so I tried. Later.